Thank you, Trustee Yonks. Our first item on the agenda is for me to introduce Cherry Burkert, and a partner there is Lauren Strope. Lauren and her group has done the audit, and she has a presentation to go over. Lauren, if you will.
Sorry, Mike, we got started.
I'm only 1 minute late.
You're 2 minutes and 25 seconds.
But no one's counting.
We all got here early, not a problem.
Well, thank you all so much for having me here this afternoon. Again, my name is Lauren Strope, and I had the pleasure of serving as your audit partner this year. Today, I'm going to walk you through a presentation that takes you through the nature, the extent, and the timing of our audit, and really kind of breaks out between the audit responsibilities and the management responsibilities related to your financial statement. I promise you I'm a better auditor than I am a presenter. So at any time, if you don't understand me, I tend to talk really fast. Just let me know, and I'm happy to slow down. So this is just a brief agenda, but we'll kind of breeze through that. This is your client service team. So while I'm here presenting to you today, there's a lot of folks that work on this audit. Dewana has been the manager for the last several years, and Dan does what's called a cold review in our industry, meaning after we complete the audit and have all of our judgments involved in that, he reviews the file and makes sure that all of our I's are dotted and our T's are crossed. This is probably the most important slide, which is we have completed our audit of your financial statements as of September 30th of 2024. We are ready to render our opinion after the board's approval. And we actually follow a variety of different standards when we complete your audit. The first is generally accepted auditing standards, and we are prepared to render an unmodified opinion on those financial statements. It's the highest level of assurance that we as your external auditor can provide, and it essentially means that we feel that they're free from any sort of material misstatement. Because you are a governmental entity, you are required to be under government auditing standards, and we'll go into that on the next slide. We are also prepared to issue a no comment letter under Chapter 10.550 Rules of the Auditor General of the State of Florida, and finally an unmodified opinion on your compliance with investment policies here in the state of Florida. So I mentioned that government auditing standards report, and really what that requires us to do as auditors is to look at the internal controls over your financial statements. We don't actually opine on those internal controls, but if we were to become aware of an issue with those internal controls during the course of our audit, we are required to communicate those to you, those charged with governance at the end. There are different types of internal control findings that you could have. The first is material weakness in internal control, and that is one such that essentially you could have a material misstatement that's not detected. The other is not as severe. It's a significant deficiency, but it does still raise to the level that we are required to communicate that with you. And to that end, we did have one significant deficiency this year, and that related to payroll accrual that was not properly accrued. This had to do with the fact that there were 2 payroll periods that actually made up your accrual. So that second payroll period was picked up and properly accrued, but not that first one. To that end, that is our only significant deficiency, and that is also a past adjusting entry, which I'll cover on the next slide. I did want to pause for just a second and let Robbie speak to that matter.
Thank you, Lauren. Management agrees with the finding. And the accounting department, so what are we doing about it, right? The accounting department has incorporated changes to the department's monthly and year-end closing procedures. Those procedures include using a checklist for both processes and journal entries to be completed at the end of each month and the end of each fiscal year. Items on the checklist are initialed as they are completed. The journal entry on the end of year checklist for the payroll accrual has been updated to include the pay period, pay date, accrual days, number of days to accrue, and the accrual dates. The journal entry will also be reviewed by the accounting manager as well as the accounting staff person that will be preparing the report for her review. So those are the corrective actions that we'll put in place going forward.
Now, this was a waived entry this year, meaning the entry was not corrected, so that expense is going to show up in your 2025 financial statements. Any questions there? I know sometimes with the waived entries, they can be.
Robbie, when we spoke about this at our discussion, do you want to just, not an excuse, but explain what transpired during that time that may have helped cause it?
Absolutely, and thank you for that question. So this payroll was during the period that Helene was coming through. And while there was a lot of preparatory things going on, that was on the heels of the tropical storm, and also we had another hurricane event that happened soon after Helene called Milton. And during that time, if that wasn't enough to try to keep the operation working, the two priorities were at that time to get our agencies reimbursed so they can continue to operate. And the second priority was certainly to get JWB employees paid during payroll. So there's a lot of files that have to be prepared, a lot of double checks and balances that goes on during that process. And while people were trying to prepare for the hurricanes, leave town, all that type thing, that was, they were asked to stay back, I think, a little bit longer maybe than they should have been to help us, and they were very willing to do that. So we were successful in that regard. And to complicate matters further is we were running two accounting systems at that point. The old Great Plains software that's been retired now, and the new Business Central software. So there's double work, double accounting that was going on there too. So again, those are the facts around this situation. It's not an excuse, and we certainly think that we have going forward the corrective action to keep it happening again. Thank you.
We are pleased to report that there are no corrected misstatements, so there was nothing that we found that we then corrected in the financial statement report. I did want to give a little shout out to management. Last year, they received the GFOA Certificate of Excellence again for the 5th year in a row, and we are very hopeful that with this year's submission, you will be receiving that award again.
So clearly what happened would not impact that award?
No, sir. So this award is specifically related to your financial statements and that they have all of the necessary items in it. So internal control findings, no, sir, would not affect that award. Good question. Just some qualitative aspects of the accounting practices. If you're like me and you're ever curious about how anyone is accounting for things, footnote 2 kind of describes all of the policies that management has implemented. There were no new policies or standards adopted this year. That's very different. I feel like the last couple years I've been telling you about different standards, but this year there were no new standards implemented. As far as related party relationships or transactions, as we completed our audit, we did not know any that were not previously disclosed to us by management, and JWB does not have significant related party transactions or relationships to disclose in your financial statements. For purposes of this presentation, significant or unusual transactions are really defined by the entity itself. JWB did not have any significant or unusual transactions to the organization that were reported in your 2024 report. The financial statements that you have are not all just hard numbers. There's a lot of management estimate and judgment that goes into creating them, and that's just part of making GAAP financial statements. As you can imagine, as the external auditor, we spend a lot of time looking at the estimates that management puts into it. This is just kind of a list of all of the ones that we discovered. I won't read through all of them, but we did find every single one to be fair in relation to the financial statements as a whole. And things like the pension, we looked at all the assumptions that the actuary used in their analysis and did find them fair in relation to the financials as a whole and what industry standard is doing. We do believe that the financial statement disclosures are neutral, consistent, and clear. As your independent auditor, it's very important that we maintain our independence. We are not aware of any circumstance or relationship that would hinder our independence of JWB, either in fact or in appearance. We do provide a non-attest service to you. Non-attest just means non-audit, and that is the preparation of the 990 for PCMS. Again, that does not hinder our independence in any way. Just some fun other required communications. I'm very pleased to report that once again, we didn't have any difficulties whatsoever in working with management to complete our audit. Every time we had a question, they made sure we got an answer. Anytime we needed support, they made sure we got it. So once again, they were a pleasure to work with. We did not have any disagreements with management as it relates to accounting treatment. I, as auditor, did not have to consult with folks outside of the engagement team in order to complete this audit. We will receive a management representation letter that will be dated the same day as the report or the board meeting. And it basically just says that everything that was provided to us or told to us during the course of audit was true to the best of the knowledge and belief of management. In some situations, management may choose to consult with other accountants, and that's absolutely fine. In a situation where management says the entire reason why we're treating this transaction this way is because ABC accounting firm said to do that, we just want to make sure that we got the same information that they did to hopefully get to that same conclusion. We, as auditors, go through a process each and every year of accepting each client. There was nothing during those conversations as it relates to JWB that I need to share with you today, which is a great thing. As of the date of this presentation, we are not aware of any fraud, illegal acts, or violations of laws and regulations noted. As your external auditor, we don't audit specifically for fraud, but of course we have a heightened sense of awareness about that when we complete our work. We talk to folks throughout the organization and a member of the board just to get their understanding of any sort of fraud or illegal acts within the organization. Nothing was noted during those conversations. I always get the question, what if something was noted? Depending on the severity of it, we would have either worked audit procedures into our audit to address that risk or immediately come to the board. There are no events or conditions that indicate any sort of substantial doubt about your ability to continue as a going concern. So a lot of words there, but that's a good thing. Just a couple other matters. The ACFR that you produce, or your financial statements, include a lot of information past just the basic financial statement, and that's what you're submitting to the GFOA. You have some required supplementary information, which includes your MD&A and schedules over the pension. You have some supplementary information, and then you have other information, which is your statistical and introductory sections. With the RSI and the supplementary information, we as the auditor make sure that we get an understanding of management of how that's created and ensure that it ties back to the audited financials wherever it should. We don't have any responsibility over the introductory or the statistical sections, as there's a lot of non-financial data in there. I am always sitting up here talking about the past, so finally I get to talk about the future just a little bit. These are some things that are going to come down. One is GASB 101 compensated absences. We're going to work with management on that, certain risk disclosures, and then 2 that will be implemented the following year. But as always, we will be discussing this with management and staff and ensuring that you're ready to hit the ground running when it's time to implement. And with that, I am happy to take any questions that you might have.
Are there any questions from the board? Seeing none, do I have a motion to approve?
So moved. Second.
Have a motion and a second. All in favor, say aye.
Aye.
And those opposed, same sign. Motion's approved. Thank you so much for your time.
Thank you. And I just want to say that we work at the board's pleasure all year long. So if at any time there are any questions, please don't hesitate to reach out.
Will do. Thank you.
Thank you.
Okay, let's move on then to select April 2025 Financial Committee meeting dates. Robbie?
The date that has been polled and recommended to the Finance Committee for your consideration is for April the 10th at 1 o'clock. There were, just FYI, 4 yeses to this date. We have Judge Moore, who has a conflict, and we have Chief Milliken, who will be out of town, but I think the other 4 of you are available.
And is that the same day we have a board meeting?
Yes.
That's correct.
Okay, works for me.
Good. Any other questions or any other comments?
And just to note, am I remembering March 27th is also a finance committee meeting? Or is this in lieu of that?
This is in lieu of that.
Yeah, that's the internal agenda review.
Ah, got it, thank you.
You don't need a motion for that, right? You're just consensus?
I think we got a consensus. I don't think we need a motion for that. We're all fine with it.
Okay.
Okay. All right, let's move on to the discussion items. Monthly financial and investment report for December 24 and January 2025. Robbie?
Yes, sir, thank you. The December financial investment and financial review is in your report. I was going to review the January 31st and go over it at a high level. So this is the balance sheet that we have before you, and with total assets down here. There's about a $5 million difference, and that is largely due to the, let me get my thoughts here. It's largely due to our cash and investments. As you all know, we have been decreasing our laps, so that has an impact on cash that's available. And if you compare that to last year, we're about roughly $5 million behind, but still in very good shape, as we have outstanding assets right now of 120 versus the 125 this time last year. Liabilities, largely the liability change is due to our subscriptions. It's up about $1.1 million from this time last year. This is kind of a new accounting accrual that we're required to do. This laying out there, obviously the board doesn't have any loans or other kinds of liability outstanding like that, so that's the primary difference from this year versus last year. And then the fund equity section that I wanted to show you here, we did an accounting change that the board approved to further show what the unassigned balance is versus what the restricted balances are. And that's the 3 months in reserves that we keep for cash flow and unforeseen expenses. So they're restricted. The unassigned is about $13 million, as you all are aware. When we budget every year due to lapse, and to deal with our lapse, we budget in the deficit, knowing that the lapse will come through and make that budget whole. So this almost $14 million is allocated to offset those expenses in the approved budget for last year. Any questions on that? That's a real quick overview, but those are the highlights. All that's documented well in your book as well.
Any questions? Seeing none?
The next item I want to go over is for the income statement. And it's a good snapshot of our revenues for this time of the year. We should be roughly 34% through our budget at this point in time as of December 31. And we've received about 85% of our total revenues. We'll have some other revenue allocations that'll be coming in throughout the year. It's usually all in fully loaded by the end of May, first part of June. I think we had another $3 million or so that posted probably late last month. So that will continue to get to the point of about $110 million, which we have budgeted for. We're about 30% of the administration budget. This time of year, we should be about 34%, so we're a little bit under budget there, so tracking as we expect it would be. And then for children and family programs, we're about 18% there. In spend, as you all know, some agencies have front-end loaded expenses, others have rear-end loaded expenses, and then you've got your spend down throughout the months as they go by. So a little bit behind budget there. We also track that from a lapse standpoint to know where we are year to date with lapse and those type of things. The other expenses that we have, the new and expanded programming, we haven't spent anything there yet. I know there are some plans throughout the year to probably utilize some of those funds. That's been slowed down a little bit with our strategic plan and the delay of it due to the storms that we had last fall. And then the Hurricane Relief Fund, the $173,000 there, the board approved $500,000 after the hurricanes for this. This is the balance of that that's still available. We may have some other expenses that'll trickle in as they are related to those hurricane events, but things have slowed down since we've been spending that down. I wanted to point out the statutory fees here and then on-administrative cost. This $2.2 million comes out of each allocation of tax revenue that we receive from Pinellas County. It is a front-end loaded fee in the first part of the year, so that's why that's a little bit higher. We usually get a refund of roughly $400,000 in unspent fee money that we have set aside and budgeted for, so that will likely equal itself out. If there's a little bit of overage and stuff, we certainly have the capacity there to absorb that. And then technology, as we've talked about, the new software applications, new subscriptions and stuff that we have, that's related to these expenses here. So this is the deficit piece I was talking about, how we use to offset our lapse, and we budget for that. This $67 million at 4 months into the year is really not a reliable figure, as that figure will continue to change as we spend our budget down. Any questions on that? This is just a quick snapshot of our revenue versus last year, and it kind of gives you a comparison that's in your book. This also is a quick snapshot of our expenditures. And this is all loaded in, so this is all the expenditures up to date, up to year to date as of January 31. Year to date administrative expenses that we have, and this is kind of broken out there from budget versus expenditures, and we're well within line there. These are contracts that have been signed and budget transfers that have happened there. They're all per board approval and any other amendments that we've had to those. This is the leftover RFA money that we did for the capital allocations for our agencies. We had about almost $1 million and a little over $1.5 million. 5.1 million was roughly the entire budget for that, and this was money that was not able to be granted or allocated in that process. And this is the total amount of the budget amendment for funds for RFA capital to multiple agencies per board approval. This is what was allocated. This was the difference between the $1.5 million and the 3.5 that we did award. It's about a $5.1 million turn in the budget there. And then our investment report, this is what we have on hand with our concentration account. That's our operating account with Truist. We get 3% interest on that. This is from the last three are the through the Florida Department of Treasury and the funds that we are able to invest in there. And as we get these allocations in from tax assessors from Pinellas County, we keep that invested. We want to keep that working for us. I'm getting a decent return on all those, so we're pleased with that. We have budgeted about almost $2.6 million in interest income. Year to date, we received about $1.2 million or so on that. Here's our investment type broken out. Here's our operating account versus how we've got most of our money invested. And then if you want to compare yields, this is our 24 yield of about 4.14 versus what we're getting so far year to date, about 4.12. So that's very much in line. Any questions on that?
Robbie, what's the concentration account used for?
For day-to-day operating.
Okay.
It's just a fancy name for it.
Funds from the other investment accounts into that on a monthly basis?
We sure do.
And how much is that? Just same every month, or?
It will vary. It will vary on what we're funding for agency reimbursements, as well as what costs that we have in it administratively, including payroll costs and those type things.
Okay.
Yep.
Any other questions?
For discussion items, the budget calendar is also included in your package, and I don't have that necessarily to display. It is a very detailed budget calendar. It includes not only finance committee key dates there, board key dates in that. It's in the package, as well as it's got a lot of internal meetings that we have. And I thought from a reference standpoint to understand kind of how we build our budgets and all the internal meetings that happen, that was important for you all to see in there. So it's at your disposal to look at. If you have questions, certainly let us know, but I hadn't planned to go through that. The last thing that I wanted to mention is something that, and I want to look at my phone because I want to make sure that I get this right. We have an event that's happening with a retirement of a very key employee, and it's with I think a lot of happiness and celebratory way, but a lot of sadness too, because I haven't had the opportunity to work with her very long. And Lynn Del Torre is here. She's a 21-year employee at JWB. She has been the cornerstone of our accounting unit. not only navigating all the accounting changes that occur from year to year, but all the challenges that go along with doing our books the right way. And she has done that as well as her staff. And so much appreciated. And Lynn, the reports that I read is certainly an integral process of that, as is Diana that sits next to her. And just depends so heavily on her. But I wanted to recognize her outstanding performance and tenure here at JWB. Lynn, if you'd like to say something.
I just want to say it's just been my pleasure to work for JWB, and the accounting team that I have is just an awesome team, and the leadership team is just unbelievable. And looking forward to the next chapter, but I will miss everybody here at JWB. Sorry.
There will be a reception that we're planning. We'll send an email out, but she'll be retiring officially on April 1st. That's not an April Fool's Day joke, unfortunately. But we have a reception planned March the 28th, and we'll send out an email communication on that. And anybody that certainly like to attend will be here at the building. Please plan to do so. Finally, I just wanted to leave you with a thought that as we begin to build the budget, as we consider our millage rate, as we look at revenue and we evaluate expenses going forward, there are a lot of unknowns that are happening right now that are out there. And I just quickly list some of them. Property assessed values, we'll know more about that in the next week or two as far as initial projections from the state. Those numbers actually get finalized in our July time frame, and that's when they're really set. We don't know what the impact on the hurricanes will be on the property assessed values at the end of the day. And we'll know more, and we'll budget more and forecast to the extent we can predict the future on those type things. But be aware of that as we go through. We know that in Fort Myers and Port Charlotte area, when Ian went through there in 22, their assessed values really didn't decline. They actually increased 5, 6, 7%, something like that, as I recall. So if that holds true, we should be fine. If we do take a hit in assessed values, then that has an effect on our revenue and what we can fund. So be aware of that. There's legislative changes out there, and I've heard even some of you all talk about that sitting there a while ago, and related to homestead and the increases of some of those benefits and those type things. That'll have a revenue impact on us for sure. And we don't want to forget, too, that we're getting into another hurricane season. So who knows what, tomorrow holds in that regard. The federal funding changes, I think right now there's a lot of rhetoric out there about that. Who knows what the final ramifications of that'll be, how that'll impact our agencies, how it could impact the state. As you all know, we get most all of our revenue other than interest income through assessed values from Pinellas County. So agencies certainly could be affected by that. It may hinder their ability to even be able to accomplish their missions for other things that they get, other funding that they get from other agencies. So that can have an impact on how we plan and budget going forward. And then just general economic conditions. I hear a lot about the inflation rate and stuff, and even in this county around 3.5%. I'd love to see those numbers, because it just seems to me like that inflation's a lot higher than that, and I think we're even seeing indicators now that prove that. So we'll see what the economic times hold in that regard, and how we need to react to that, if at all. And then we'll continue to keep a real focus on lapse, contingencies, vacant positions, not only at JWB but within our agencies that create lapse. In addition to how our interest income is affected. So we're taking a lot of, and have been at the board's discretion, to remove a lot of our fluff and contingencies, especially surrounding lapse, out of our budget. So we're as lean and mean as we're going to be, and we'll continue to focus on that as we go forward. But if we run into harder times, as we've talked about, we need to be aware that some of that available funding may not be there for us. Right now, we're in excellent financial condition, and I have nothing but positive things to say about how we're reporting and how we're spending down our budget and forecasting for our revenues and those type of things. So just a few things to think about as we get into the budget season. Thank you, Mr. Chair. Any questions for me?
No, I think we're great. Thanks for the update.
Absolutely.
Okay, let's move on to the Chief Executive report, please.
Well, I'll be very brief because we're we have a board meeting next week, so you'll hear from me then. I was gonna share some of what Robbie just shared. I would just add a few possibilities. There, besides increased exemptions, besides property values, and besides discussion of increased exemptions to property tax, there is discussion about eliminating property tax statewide. Certainly impact of federal cuts, a significant percentage of those go to the states, and agencies then are funded by the state, but it's really federal money that got there. As well as agencies that we fund who also receive significant amounts of money directly from federal programs. So, nobody has the perfect crystal ball on how many of those things are likely to occur. Every day gives you a different sort of flavor of those. As of today, it sounds like they're more likely to happen a little slower than faster, but we still need to be incredibly cautious about stepping out and getting in front of our skis financially with all of these possibilities, and some of them almost surely having some meaningful impact to us. And that's all I thought I'd give you this week. We'll see you again next week.
Any comments or questions for our Chief Executive Officer? Do we have any? We have none. So having none, I'll adjourn the meeting. Thanks, everyone.